Welcome everyone to the broadcast. I think we're live. If you can hear me, just drop and I can hear you down below. If you're excited for what I'm about to talk about, just drop an excited down below and let me know what your biggest questions are for me to talk about next week. But if you're enjoying these market updates and you are watching me on the regular, just make sure that you go in and you like and you subscribe to the channel. You like this video and you subscribe to the channel, and then share with anybody who you think might be interested in this or this might help, because that obviously helps me grow. And then as I grow, I can do more content and put more stuff together to keep doing this and make it awesome. So the couple things that I wanted to go over this week that we're going to cover are, we're going to cover the big things coming for Ethereum. I mean, Ethereum's on the verge of some pretty significant movement if things happen correctly. Bitcoin, what it's looking like, where it's at in comparison to what I talked about last week and what's going on. And then we're going to talk about how to lower risk in DeFi. And so DeFi is decentralized finance, where you can earn a pretty considerable APY or APR on your assets, but you can also get wrecked. And I think a lot of people get wrecked because they do some of the things I'm going to talk about later. But without further ado, let me share this video to my private Signals group where we talk and we chat, and they have direct access to me and everything else that's going on. If you want access to that group, just comment Signals down below and I will send it over to you. It's not a channel where I'm like pumping coins. It's a channel to where we have just an open line of communication for questions, for people who maybe need help or want some more info and stuff like that. So that way I can be a little bit more involved than just doing this YouTube video. So let me share this over and we will get this thing started. Just 1 second. And I promise this time I'm going to have my volume on and I'm going to share my screen. So let's check out the market. Let me know if you like it when I do the market update first with the charts, or if I go straight into a market update here and just talk about coins, what's trending, what's going on. Let me know which one you like better. Do you want me to do the charts first, or do you want me to go into the overall market first and talk about that? Just comment below. Let me know what makes sense. So biggest thing, let's look at the rankings first. Let's kind of get an idea of what the market looks like right now and what's really going on. So Bitcoin, I mean, it's not bad where it's at. We were at low 45s earlier, and then we just pumped straight back up. So there's a lot of strength in the coin that we're seeing right now. Ethereum is just a monster right now. It's been pretty interesting watching Ethereum just pump and then hold pretty strong, especially when you look at the charts. We'll look at that later. And the reason I think Ethereum is pumping hard is because Ethereum 2 is supposed to come out in June, which is going to essentially move Ethereum to a proof of stake model versus a proof of work model, which in theory should reduce congestion, lower gas prices, and ultimately make Ethereum just this next level thing. Ethereum is going to be, people should be able to actually use it without hundreds of dollars in gas fees. Ethereum should be more environmentally friendly. And it's just like the next level of Ethereum. It's everything Ethereum should be. It's everything that Solana and AVAX and Phantom and all these other chains were created to do. And so that, in my opinion, should just move Ethereum to the moon. And it should also move coins like Matic, which are basically position themselves to be in a place where they want to scale Ethereum. So that's going to be pretty interesting to play out. And we'll look at the charts and see what those are telling us and what's really going on there. And as always, remember, the whole market depends on Big Daddy Bitcoin, not just colossally collapsing. So you always want to pay attention to what Bitcoin is doing first. And then you can look at the other coins and kind of reference what's going on to make an opinion as to where the market's headed. But if Big Daddy Bitcoin doesn't go anywhere, nobody else is doing anything either. So we have to make sure we're aware and cognizant of that, because alts can't move if Bitcoin refuses to move. Even when you look at these charts in the last 7 days, it looks fairly similar in terms of Bitcoin and Ethereum. Ethereum looks a little bit stronger in terms of where it's been. You look at BNB, literally the same. You look at all these charts, and other than Solana right now, which had a pretty decent drive, they all look fairly similar. Luna just looks like Solana just went nuts, but they maintain a pretty similar chart to Bitcoin, which is quite interesting, actually. So let's look at what's going on in the market. We've got ETH, which looks fairly strong, 4% up over the week. We've got BNB, which isn't doing too bad. We've got Solana, which went up 22%, which is great. Terra Luna, which is up 19%, which has been a monster. Cardano is it's been moved up to about $1.20. It's been sitting here. It's up a little bit. AVAX, it was up above 100. AVAX looks like it really wants to move. And so when I talk about why they want to move, let's go back and look at the charts associated with these coins. Like, let's look at Luna. And when we look at Luna, what happens is Luna essentially it's flipped, it's gone over its support band, it's gone over its 200-day moving average. Luna looks really good, and when you see what's going on with the coin itself, every time it tries to go on another run, Bitcoin dumps a little and doesn't support it moving. But when you look at it moving on these logarithmic zones, it tends to hit this zone and then get rejected, and it's done it a few times. And so what'll happen is it'll hit. Let me make this so you can see it better. It'll push through, which it did. Oh, this is Bitcoin. Let's go back. Let's go to the actual Luna chart. So what'll happen is, I was like, that doesn't look right. So what happened here was Luna was trying, it pushed through its little bull market support zone. It pushed past its 200-day moving average, and it bounced off this line of support and then just continued moving itself up. So Luna has just had this monster drive. It had this like little W, so down, bottom, up, bottom, and then punched. And it's because they added a bunch of Bitcoin to their reserves. They had a bunch of good press, and it sort of launched Luna into outer space. So its previous high was this 103 zone. So we had a little bit of trouble passing it. Then once we did, now we're sort of staying in the zone. And I'd kind of look at 133 to be my next zone for it. But the chart looks healthy and strong, as you can see right here. Same thing with when you look at like AVAX, it's above its support zone. It's kind of trying to push past this resistance line right here at this like $97 spot. If we can push past that, then 116 looks like another good zone for it. But you can see AVAX is above this zone. So AVAX for me, my two buy zones for AVAX were 73 and 97. And what these tend to be is, from the top, I'll look at like a 30% retracement for like long and short zones for derivatives, people playing on leverage. So I'll look at a 30%, about a 50% zone. And that kind of gives me a good idea of where to buy. And as you can see in the charts, it does provide a pretty good opportunity. So first it passed here. When it came down, it fell straight through. Then it pushed through. Then it came up, it touched, and then it touched, and it just stays in this little zone. And so that's where we're at right now. It's kind of deciding, is this going to be my final buy zone? Is this going to be a push up and moving to retest this 116, or is this going to be a press down to 73? And in my opinion, this just depends on Bitcoin. If Bitcoin goes up and holds, it'll push past. If Bitcoin goes down or just moves sideways for a while, it'll get hammered and go back down. So that's kind of where we're at with that. It looks fairly bullish. It's in a good zone in comparison to sort of its high. Let's look at like Atom. When we look at Atom, my two zones were like 22 and 31. And Atom's basically been sitting at 31 for quite a while trying to get past this. And people start calling the coins like stable coins because they don't move and they stay in the zone. But that's because Atom is sitting at its 30% retracement zone, which has been good. It fell straight through, pushed past its little bull market support zone, fell through, wicked off of its 50% retracement zone, came back up, kind of finally pushed past it, got shut back down, and now we're back up right here testing it again, which coincides with its 200-day moving average as well. So it's a pretty important zone for Atom. If it pushes past this, it gives it the strength to move back up. And this is how all these coins work in these retracement zones. You look at DOT, it's all of a sudden got all this strength. It's trying to push past its bull market support zone, which will put us back into a buy zone for Atom, and which coincides with its 200-day moving average. And that puts us back up here to come in and test its 30% retracement zone. So DOT would be incredibly undervalued right now. Same thing with Phantom. It's coming up to test its support zone. We are coming and moving into our two retracement zones up here. So Phantom's got this resistance it's trying to pass right now, which is like the 170 zone. But then that gives us the opportunity to test the 199 or 192 and then the 242 zones, which puts us in a pretty good buy area, in my opinion. Same thing with Mana. So this is kind of how these coins operate. These are my buy zones for Mana. And right now it's pushing past this 200-day moving average. Notice how it's fell through, but it's been wicking off it quite well. It's wicked off it. It's in here. What's going to happen is if it just wick down, it'll move another couple candles and it'll either push straight through and put us in a really good buy zone, or obviously push back down and wick down here again, but it's been holding strong there. Looking at Axes, it's similar situation, undervalued, waiting to push through. I know they just got hacked, but they don't look that bad. Sandbox, a lot of these coins look similar. And so this is kind of just an idea of what I'm looking at and where I'm at. Uni has been in a downtrend since February, April 2021. And it's right now it's looking at like it wants to push out of this downtrend, which would be a pretty significant move for Uni. Same thing with Link. It's been in a downtrend for over a year. Link's starting to move past and get out of this downtrend, which would make a significant move for Link. So a lot of good projects making moves. If there's something that you want me to cover, just drop that project down below and I will look at it. If it's like a shit coin or something like that that's gone up 900,000% or something everyone's shilling, I'm probably not going to be that interested in covering it. But if it's a good project or if you have good ideas or questions about it, then I will be. Basic attention tokens, same situation. So a lot of these coins end up in this situation where they come back to test these two zones, this 30%, this 50%. And if they push through them, they end up in this zone for a while. And then that gives them the opportunity to move up. So like, let's look at Solana. Solana zones for me right now, it just pushed back into its 50% retracement zone. So 132, which is essentially a good buy zone. I know a lot of people are like, you buy the dip right here at 79 or whatever, and then it pumps and you're happy, but this is a good zone. Like this is the first buy zone for me and the second buy zone, which gives us the opportunity to move back into when it moves into newer all-time highs or moves to new levels. I did call SNX last time. I said that SNX was breaking out of its year-long downtrend, which I was incredibly impressed by, that it was in a downtrend for so long. And it did break out and it went from 351 all the way up to just about $8, which was actually impressive. And now when you look at SNX, it wicked off its 200-day moving average. So it actually doesn't look that bad if it holds here, which is incredibly impressive. My buy zones from SNX when it was killing it, I'd have to go relook at it. It's been a while, but it's moving into newer zones. It's 200-day moving average, which is incredibly impressive. So let me know if that's helpful. And I'm going to look at some more alts. So when we look at these, that's kind of how I start judging them. I don't judge them by sort of hype. When I start hearing about it on Twitter is when the thing's probably going to start taking off. If you're on Twitter, you're fairly early. If you're on Facebook, you're probably too late. It's kind of how it operates. Near has been sort of unstoppable. It's just moved really well. And it's been a really popular blockchain. Cosmos is taking over quite a bit. It looks good. Even Litecoin's moving well. It just tells me that the market's heating up. The market really wants to move. We just have to get permission from Big Daddy Bitcoin to actually do it. If we don't get permission, we can't do it. When we look at the ETH Bitcoin chart, this is another interesting thing for me. Looking at this chart, we've been in this, I talked about this last time, and I've talked about this several times in this channel, in this live stream. I talked about it when we were below this support band, we were getting rejected. I talked about it when we were about right here, and we were kind of testing in the middle of this, that if we surpass this, it puts us on par for a pretty significant alt season. So we did, like I said, we did just get stuck right here for a while. And then we pushed through it, pushed past that 200-day moving average. Once we pushed past that, we wicked straight up, and now we have broken out. And so what this means is when we break out, and I use the Ethereum with respect to Bitcoin chart because Ethereum being the largest altcoin gives us a good idea of the overall altcoin market cap and what it's doing and where it's moving. So with where it's moving at right now, what I'm looking at for this is we've broken out, we're coming down, we've retested, wicked a little bit. That doesn't mean it's not going to do it again. It could come back down, come back up, come back down, and it could test this for a minute. Right here, it came all the way up and then fell all the way back down. You start seeing these like high, lower high, dump, and then wick, come a little bit of a relief rally, sort of retest, complete dump. So what we're seeing right now, in my opinion, is we just had the big push, which put us up here. It may come back down and test. It may do it on the next candle, or it may pump up. And so if it does pump, what happens is the altcoins go on a rally and Bitcoin essentially loses its dominance with respect to the market. So with that being said, most altcoins will just start going up, and they'll start going up by a monstrous amount. You can see the tiny rally we had here in November where a lot of them went crazy, and it wasn't even that big. So imagine if we had an altcoin rally, which we haven't, since we entered this channel. We had a decent one right here, April 1st, 2021, where it ran all the way up. And so if we look at that and we get something like that again, that puts us in a pretty good place to rally and enter a significant zone, because this zone was the previous sort of high that alts had in the past when we went on the run in sort of 2018 and even it was even higher in our 2017 bull run. So there's a lot of opportunities to come back and surpass the total dominance that altcoins had at one point, as long as we can break out. And remember, it's up to Bitcoin to decide if we can break out or not. If it's going to say no, then we're not going to do it, and we're going to just crash and burn. But right now, it actually looks fairly strong because we did break through the support band. We broke through the 200-day moving average, and we are now sitting up above the channel. So if Bitcoin can maintain sideways momentum or slightly upwards, it puts us in a position and with the Ethereum launching ETH2, it puts us in a position to where there's good enough news and good enough price action movement right now to potentially allow us to wake and drive back up. So that's kind of what I'm looking at for the altcoin market as a whole. It does look healthy. It does look quite bullish as long as Bitcoin behaves. And so with that being said, let's look at what Mr. Bitcoin is doing. So like I talked about previously, this is the monthly chart. With Bitcoin, when we're in a bull market, we're typically above the 200-day moving average, and we're above this bull market support band. And when you look at the logarithmic regression rainbow, which someone asked me to talk about today, which I will, we typically don't go, let's look at the past. Like looking at 2017, 2018-ish, or even 2020 during the big run, you'll see that we'll tend to come down and we'll touch the bottom of this zone and we'll come through. And then we'll if we come down below that, it's usually a big wick, but it usually doesn't go that low, and it comes right out. Like these are incredible buy opportunities. Like, can you imagine buying Bitcoin at $3,000 at this point, or even back here buying Bitcoin at 3,300, and then seeing it come in and move through these zones. And so what you'll see is Bitcoin it'll hit a new zone, and then it'll get hit, or it'll get punched back down. So in these, we pushed. Let me make this bigger. This is a good example. So in this one, when you're looking at the zone, it was stuck in this zone for a while, and then it pushed through, hit the top of this zone, got pushed back down, came through, hit the top of this zone, got pushed all the way back down to test the support band. Once it tested, it pushed all the way through to the next zone, got rejected, went all the way back down to the previous zone. Once it got rejected off that, it pushed straight through up to the next zone, got rejected. So that's kind of how it works. It works in these logarithmic zones, and it gives you a pretty good understanding of what price action looks like and what it's going to look like in terms of tops and bottoms from a macro level. This isn't necessarily like day trading, but it's helping understand what the market looks like from the macro perspective. Even look at the monthly here. So we punched through this zone, fell back through, punched through, fell back down, punched through. It just works in these zones. You can almost look at these zones, and as soon as we hit near the top, we're going to either wick back down if the bull market support band's here. If it's not, we're going to wick back down to wherever it is and probably wick off of it. Then when we're over here, when we look at where we're at right now in April, we weren't super bullish, obviously, November, December, and January where we got crushed. But notice what happens. So in this previous drive up, we essentially came up, we moved to the next candle, we hit the top of this logarithmic zone all the way back down, we hit the top of the next one, pushed back down to the wick off of this zone, and then we pushed all the way through, and then we pushed all the way up to this zone again, and then we wicked all the way back down to test it, came back to retest, couldn't make the top of the zone, and got crushed all the way back down because we fell through the bull market support band here. And so with where we're at right now, what's going on is we're in this phase of testing to get past it. And so if you look at previous highs, like right here, when we tested it, we got straight up rejected, and then we wicked on through this logarithmic support zone, or this logarithmic band here, and it pushed us all the way back to test this. We got rejected, pushed down, got pushed back up, got rejected, wicked off of it. And once we wicked off of this, it pushed us back to clear this new all-time high. Then when we did clear the new all-time high, we hit the top of this zone and we got pushed back down. It tried to wick off of this zone. Then the next monthly candle got pushed down again, and then we fell through the bull market support band. So these kind of things add points of confluence to where we're at. And when you look at here, and in these previous videos, I've talked about how we're in this zone and we've been stuck in this, sandwiched in the zone for a while. And so when you think about these zones, as price action moves, the zones are going to go up. As price action goes up, the zones are going to move up. So with where we're at now, it used to be the 33 to about 48. It's about 35 to 48 that we're in right now. And so when you look at this zone that we're in, we've been rejected, fell through, we wicked off of essentially the bottom of this one. We pushed all the way back up, got rejected again. We wicked off of that zone again, pushed up, and then we came all the way back down. We actually created this little support channel, which gave us a higher low, and then we pushed all the way through that bull market support band. And then we came back over, we wicked legitimately right off of it the last time when we were kind of going down, which was incredibly impressive. I told my signals channel group that we were going to wick around 43-ish, 44, 43, high 43s. And we wicked right there, 44.5, and we pushed through. And we've also had this cross, which is incredibly bullish, because once this crosses in the green, moves to the top, it moves us to more of a bullish cycle or zone. Once the red is on top, it moves us to more of a bearish place. And so with where we're at right now, it tells me that we are moving to test, if I move this line, this 200-day moving average, which is the final point of confluence and the top of this logarithmic zone. And so if we push past these two, this is kind of where we're at now. Notice how we've tested this and we got rejected. We almost tested it and we're sort of pushing back up to it right now. This would be the final point to put us in a bull market, to give me 100% confidence in the bull market continuing. Because then what'll happen is if we push past that, we're going to push through it. Probably one of two things will happen. We're going to push through it. It'll either come down and retest immediately and then bounce and move it to the next zone, which is like 69,000. If that happens, it'll look like this. It'll go up, come back down, and then push straight through. At that point, it'll probably be in the 70s. So that'll push us to maybe a new all-time high. And then at that point, what's going to happen? Well, this zone's going to be higher. We're going to get rejected and come right back down, probably somewhere around 53-ish. And then if we hold support there, well, guess what? Then we push back up and we move to 88, and that'll be higher at that point. So somewhere up there. So that's kind of what the cycle would look like if it continues to play bullish, if it continues to be bullish. And this is from the macro viewpoint. So it's going to be, we push through this 200-day moving average in the top of this logarithmic zone. We're probably going to retest. If we retest, we bounce to the next zone. Right now it's like 69.6-ish, but by the time we retest and bounce and move, it'll be higher. Then same thing, we'll hit the top of this, we'll get rejected probably, and then we'll bounce off of support wherever the bull market support band is, probably somewhere in the middle, or maybe retest wherever this is at that point. And then if we sustain it, then we'll push past to the next zone. And so we're going to keep pushing through logarithmic regression zones until we find a zone that completely rejects us and annihilates us and pushes us through this bull market support band. And so you'll notice that's kind of how it works. We test this zone, we come back, we basically push off the bull market support band. Next candle, we push, we get rejected. We come here, we test off of the bull market support, also the top of this channel, pushes back up. This one tests right there, pushes through here. And then we come to this candle, gets rejected off of here, pushes all the way back down, which tests the bull market support, moves to the next candle, gets stuck in the middle, gets rejected and essentially dead. Same thing here. We bounced off of the bull market support band. We pushed all the way through to the top of this channel, got rejected, pushed down, bounces off of the support band, moves back up, and then gets rejected, starts the next candle right here, gets immediately rejected off of this one. We fell through and go into this little mini bear market we've been in. So that's kind of where we're at. Points of confluence that I think are actually really interesting that we're seeing right now. If we look on the weekly, I talked about this in the last one as well, but when we look at the weekly, we do have this cross. The last time, like I talked about, the last time we had this cross was when we cleared the last all-time high. So the fact that this crossed tells me that we have some momentum coming up, because this cross does not, the weekly MACD cross does not happen often. So that tells me we probably have some pretty significant price action we can expect at this point, because of the fact that this is a fairly bullish occurrence. It doesn't occur all that often. It's not like a 4-hour candle where it occurs quite often. So when we look at that, that gives me a lot of bullish ideas in my head. The fact that we got rejected about 847 million times here, and then we actually pushed past it, we wicked off of it, pushed through, wicked off of it again, tells me there's a lot going on there, because what's happening now is this bull market support band is going to start coming up. And this is obviously going to move up, but we're going to sort of get sandwiched in here. And then eventually it's going to either test it enough to blow through it, oops, or we're going to obviously come back and get rejected and fall. But the points of confluence for me, the weekly crossing, the fact that we actually pushed through the support band and we've tested it not once, but twice, and we're sort of on the weekly clearing higher lows, tells me that we probably have some pretty good momentum coming ahead. So for me, I'm ultimately not like a 100% excited about this thing until we clear this 48,339 zone and ultimately this zone. But right now I'm feeling pretty good about the market because all of these points of confluence are starting to add up to tell me that maybe where we're headed is going to be in the direction of up, which is where we all want to be, versus the direction of down. If you would have talked to me back here, would have been like, yeah, we're probably going to go retest a new low. It's more likely that we'll come test this than if we fall through that. Well, we're probably looking somewhere around 26. But at this point, it's looking a lot better, and I'm feeling a little more bullish about the market. I'm not the person who's here to shill and tell you things are going to be good when they're not, but right now they do look fairly good. As long as we can move past this 48 zone, I think we're in a pretty good spot. So let me know if that makes sense, and let me know if that was helpful. Just drop a helpful down below so I know that you like what I'm putting out. Next, I want to cover volatility in DeFi. What's up, Kevin? Thanks for joining me live. So what I want to cover next, let me close some of these charts. Let's cover volatility and risk in DeFi. So a couple of things I want to talk about here are the big things in DeFi. So you can make incredible amounts of money in DeFi. You can earn great APRs. Last time I talked about APY versus APR, and should definitely be well versed in that to understand that APY can be a misnomer in DeFi. If you're interested in that video, just comment APY video down below and I'll send it over. But the big thing we want to look at here is we don't want to chase APYs and hype. You don't want to chase a coin that's just pumping and has like 10,000% APY, because you can get wrecked. And the reason you can get wrecked is there's risk associated with pairs. So say you're in a pair that's like, here's an example someone asked me about the other day. Say you're in like a sushi swap and magic internet money, or sushi swap and like a stable coin pair. So you have a volatile asset and a stable asset. What can happen is if you're in that pair and say the APYs are like 400%. And so when you think about that, okay, well, what's 400%? And if we move that into like an APR calculation, just roughly, we'll say 400. That's like 1% a day. So let's say that Bitcoin is going to go on a big run. Okay, so if Bitcoin goes on a big run and sushi moves up with it, you're in a good spot. Your sushi is going to get sold back to that stable coin. So you're going to experience impermanent loss. So if sushi goes parabolic, you're going to lose a massive amount of value in terms of what you would have had if you just held the sushi swap, even if you're probably sitting in that APY. Now, let's just say it just goes up gradually. You'll probably be okay because it'll sell it to the stable coin, but your APY will probably compensate for it. But let's say that the market tanks. And let's say you're in a coin that's not as blue chip as sushi. Maybe you're in some random coin that you're getting 10,000 APY for. Well, let's say that random coin goes from 8,000 a coin all the way down to like $27 or $300 a coin or something. Well, you just lost 90% of the value in that project. And so the fact that you just lost 90% of the value that you had staked means that you're not going to be able to recover the funds that you were earning even with the high APY or APR. So you're going to essentially have a net negative. And you have to think about the DeFi in terms of risk mitigation and management, and think about how you can use something long-term to create wealth to be able to put yourself in a position to where you win. You kind of have to treat DeFi like it's a business. You don't necessarily have to monitor it and pay attention to it 24/7, but you have to pay attention to risk and volatility associated with the pairs that you're in, so you don't put yourself in a position, in a place to where you totally get wrecked and the APYs won't even support and sustain the amount of money that you've lost in the pool because the coin's gone down so much. And so you have to think about what's the downside risk with a pair. Now, if you're in a pair that's like Bitcoin and a stable coin, or Bitcoin, Ethereum, or something like that, well, and that's a long-term hold, you're probably fine. You can probably sit in that for a while and not get wrecked. But if you're in some random coin that you're chasing with hype that has a high APYs, it's probably going to be a problem. So then the next thing we want to understand is, how do you mitigate risk? So how do you take that risk? And I didn't even talk about the idea of like hacks and making sure you quantify and understand what projects are good and what aren't. If you want me to cover that, what makes a project good? What makes a project something to invest in? What makes me feel safe about a project? Just give me a safe down below, comment safe, and I'll do that on my next video. But the way we mitigate risk is number one, we track our numbers. We should track everything down to a T. We should understand our finances just like we're managing or utilizing a checkbook or something, balancing a checkbook. And remember, this isn't financial advice. This is just what I do because I don't like to lose money and I like to mitigate risk. So we want to track our numbers. What I track is I track gas fees, every dollar I've spent in gas fees across the board. I track the amount of APY associated with the pool, and I track the dollar value of the pool amounts, and I track the impermanent loss associated with the pool if it's a volatile asset paired with another volatile asset. So that way I understand, okay, how much did I make? How much did I make in terms of APYs? How much did I lose in terms of impermanent loss? And how much is my overall value going to be worth now? So that way I can understand if I'm making money or if I'm not making money, and I can make decisions that are going to be logical and not emotional to make sure that I continuously put myself in a place to earn and not lose. This shouldn't be a game of losing. Like I don't like to lose money unless people do. This isn't what I want to do. So I want to mitigate as much risk as possible. And so the last thing we want to look at is you want to recognize what the daily yield is, not the APY. So there's a calculator, I think it's like APR to APY.com. Just use it in reverse to figure out what the APR is, then divide that by 365 and figure out what the daily yield is. So that way you can get an idea of what you're going to be earning on a daily level. Because in DeFi, chances are you might move around a little bit once every couple of months. You might not have to, like I've been in the same things since like January. I haven't had to move them around a lot, but I'm also recognizing and tracking and I understand the fact that a year in DeFi is like a 10-year time period. So you're probably not going to be in pools that long, and you might have to move around and shift a little bit. So we have to recognize that we want to look at the daily yield and not say, okay, APY is what I'm going to go off of, because it might not be that long. It might not be in there that long. Because maybe the coin starts going parabolic and you have to pull it out so you don't experience impermanent loss. And so there's a lot of factors to take into consideration to make sure that we treat this like a business and not just something that we're playing with. And even if you're new to this, like when I was new, I lost money. I made stupid decisions. I didn't do the right things. And I had to learn how to create a system to allow myself to continuously win and loop back profits. And so that's what I do now. And I call it the looping leverage strategy, to where we can create stable profits from assets that aren't going to be volatile, and use those profits to loop back into more volatile pairs. So we can essentially play with the house's money. And that's kind of where I'm at now with what I'm doing. So if you're interested in understanding what the looping leverage strategy is, just comment looping leverage down below, and I'll add that to my either next week's video or the week after. But this is sort of how I mitigate and avoid risk in terms of DeFi. Let me see if there's any questions before I move on. No questions yet. So let's talk. Someone asked me to go over a couple of protocols that I use. So now, how would I find protocols that are going to allow me to mitigate and reduce risk by using non-volatile assets to create volatile assets to be able to use my looping leverage strategy? Well, here's a couple of protocols that I really like. I like Liquid Driver quite a bit, and there's a bunch of good examples in here. So one of the things that you'll find here is, okay, look at Liquid Driver Phantom. This is what we would call a volatile pair. Liquid Driver is a volatile asset and Phantom's a volatile asset. Both of them, I think, are really, really good projects. Liquid Driver's blue chip, Phantom's blue chip. These are great. This is a great thing in Phantom. So nothing bad about this project or anything associated with it. When I look at Liquid Driver Phantom, the APR, which is good. The fact that they track it via APR for me is a good thing, because I don't look at APY and see it as a misnomer. So I can say, okay, APR 71% divided by 365. What does that mean over the course of my daily yield? And when your wallet's connected, you can sort of see what the fees are and what you earn and all that. But okay, when I look at Liquid Driver Phantom, say Liquid Driver, it's a smaller asset. Say it goes parabolic, you're going to sell back your Liquid Driver into Phantom, and you're going to essentially experience impermanent loss associated with that. And so first step is understanding, is the loss okay because the APR compensates for it or not? And then the second thing you have to look at, but what if I'm in this pool and what if the market completely tanks? Well, then this APR isn't going to compensate for the loss of revenue I'm going to experience from the assets I have in here. So that's the next thing I have to look at. Am I comfortable taking a loss on a pair to earn here? And if I do take a loss and this doesn't mitigate for it, am I at a net loss, or am I okay in being stuck in there for a while? So when I look at assets, I want to say, okay, well, Phantom's probably not going anywhere. So like a Phantom USDT pair, Phantom with a stable coin, would be a pair that would mitigate some of the loss, because Phantom is going to it's going to be around. It's going to move with Bitcoin up and down. And I am going to lose if I have a large amount invested in this and hoping I'm going to make up for it here. But at least it's a blue chip, and it's a project that's like AVAX or something like that. That's not going to essentially go to zero at some point. The problem with this though is if Phantom did go parabolic, you're going to experience impermanent loss because it's going to sell your Phantom back to US dollar tether to kind of try to keep the pool 50-50. So what do I do? Well, I look at these and I say, okay, well, what's the easiest way to mitigate risk in what I'm doing? Well, it's to find a stable coin pair. How can I find a stable coin pair that pays me out in, let's say I want to earn Liquid Driver, which I do. I love this project. Say I want a stablecoin pair that's going to earn me Liquid Driver, so then I can take what I earn, cut it in half, and then put it in this pool, and now I'm playing with house money. So then I would say, okay, well, let's find a pool that's a stable pair. Okay, now we have one. Okay, day US dollars coin. So it's 49%. Both of these are at $1. This would be a tier 1 stable coin, and this would be like a tier 2. So biggest point of risk here is you have to make sure that day is going to not depeg and fall, and obviously US dollar coin. And so you have to make sure, okay, is that pair, am I comfortable being in a pair with a tier 1 and a tier 2 stable coin? And if you're interested in tier 1 versus tier 2 stable coins, you can go to my last video, just comment stable coin down below, and I'll post a link over. But then you can say, okay, what am I going to earn off of this? All right, well, I'm going to earn 40%, 42% in deuce, which could put me in a position to where I could essentially sell half of that, pair it with Phantom, and then put it in something like this to earn Liquid Driver and a fairly decent trading fee. Until today, they had a pretty good fee in deuce as well. The problem with you'll experience with that though is deuce has been parabolic, so you're going to get a serious amount of impermanent loss. So then you could say, okay, I like that. This is a great stablecoin pair. What if I just want to be in a stablecoin and earn Liquid Driver so I can put it back into this pool? Well, then you keep scrolling. You're like, all right, well, where's another stablecoin pair? Do they have another one? And then you'll find, oh, it's the same pair, but it's 38% down here, and it's earning me 38% in Liquid Driver. So now I can say, okay, well, now I'm earning 38% in Liquid Driver off of the two stables I have. So I have a non-risky or a medium range tier 2 stablecoin paired with a tier 1 stablecoin that's earning me a volatile asset. So I can take that volatile asset and I can put it in here, sell half of it, or I can just sell all of it and put it back into the stablecoin pair and just continuously stack stablecoins. Kind of depends on where you want. Do you want completely risk-free, or do you want to have a move into a strategy to where you can play with house money a little bit? It's kind of what I look at for that. And then another project I like a lot that has a good example is Beethoven. So when we go to stablecoin pools, I would go in here and be like, okay, well, one God between two stables. This is that same thing I just showed you in Liquid Driver. We earn 11% in beats and 29% in deuce. So then what I can do is I can say, okay, the beats I earn, I can go and put them in the Fidelio Duetto pool, which beats is kind of cool because it's a balancer fork, which means that you can have a pair that's 80% beats and 20% phantom. So you're going to experience a lot less impermanent loss because it's not a 50-50 pair. So then I can say, okay, what I earned here, I can just take the beats that I earn here and sell half of it, and then put the half of it or 20% of it and put it into this pool. And then I can say, okay, now I earn the deuce as well. So now I have that coin, and I can do that, or I can just sell it all and put it right back into the stable pair. Then if you're really risk averse and you don't want to deal with tier 2 stable coins, then you can say, okay, US dollar coin DAI, 2 tier 1 stable coins. You earn 4%, which is, I mean, you may as well just put it in Anchor Protocol. My other thing is, if it's lower than 20, I'm probably just going to put it in Anchor Protocol. And so then I can come back here and I can say, okay, well, let's see, we have 22% UST and UST, two different variations. That's kind of how I look at it. I can, and this is what I call looping leverage, and a strategy that I use to make sure that I stay safe and I don't get wrecked in the DeFi market. The last one I like quite a bit is Taro. If you're in the US, you kind of have to use VPN for this, but one cool thing about this one is you can play on leverage, but what I like as well is you have the supply APRs. So let's say you're like, well, let's look at US dollar coin and see what we can, see what we can do here. And you can go in here and see what the supplies are, which is essentially a single-sided staking. So you're not getting impermanent loss. You're not really exposed to anything other than the single-sided staking capabilities of the coin. So you can kind of go through and look at a single-sided opportunity like Mai is a stable coin. It's a tier 2 stable coin, but it supplies 36%, which is great because all you need is that to put in there to earn 36%, which is really good for a stable coin pair, and a really easy, maybe not easy way, but an easier way to accumulate wealth even in a bear market. So that's pretty much all I have to say today. Let me know if that was helpful. Just drop a helpful down below and let me know what your number one biggest takeaway is from this video. And then let me know what you want me to talk about next week.